Hello everyone. Today we are gonna do a presentation about research on financial market and capital budget analysis in Australia. We are from Holmes Institute, Melbourne. There are four group members of the presentation. My name is KMP Karmanayaka. Student ID is ENE3378. Let's move to the presentation. There are three parts of the presentation. I will be conducting introduction and first part of the part 1 question. First part of the presentation, research and facts finding on Australian financial market. In here, comparison of key financial institutions in Australia and also analysis of three financial institutions such as capital budgeting, capital structure and working capital management. This part will be presenting by Puma. Second part of the presentation, facts finding of financial market regulations in Australia. This part will be presenting by Sandhuni. She will be explaining and presenting an analysis of Australian exchange listing requirements and also requirements on financial advisory services regulations in Australia. Last part of the presentation will be presenting by Prana. He will be doing a case study. Let's move to the first part of the presentation. Here there are four key financial institutions in Australia such as commercial banks, insurance companies, investment banks and also investment funds. There are many classifications as you can see, which category under there and also which sector they are running their business and also key business activities as you can see here, ANZ, AUB, NAB and also Acron Capital I have selected for the presentation. And also their main source of income and code of listing. Stock was listed on the first date and also their total outstanding shares, market capitalization, their chairman, COE and also next dividend payment date. As you can see here, all of the companies, their next dividend date is this year December 31st. As you can see, there are four charts here. The companies, how they have dividend payments in 2019. Let's move to the next part of the presentation.
Hello, my name is Piyama Berman. My ID is ENE3372. Today we are going to discuss about analysis of financial management questions. Firstly, we are going to look at capital budgeting. Capital budgeting is a method that a business practice to determine, to evaluate when they get into major developments like construction plan for a new construction plan or new investment, or when they want to purchase a expensive thing. So, for an example, through CNN, I've taken the introduction of Airbus A350 XWB, where Airbus have tried to bring up a new product to compete with Boeing. So secondly, we are going to look at the capital structure. Capital structure is the particular combination of debt and equity used by a company to finance its overall operations and growth. So in this case, I have considered the Noble Group Capital Structure and Financial Times of in November 2014. It talks about how they have used their common stock, preferred stock and returning earnings and how they have worked with the capital structure. Thirdly, we are looking at working capital management. This refers to the business strategy that management have a continuous focus and maintenance with a balance between their current assets and liabilities. So the managements who are able to maintain an effective balance between these assets and liabilities, able to meet their financial obligations successfully. It's not only that, they'll be able to enable their boost of earnings as well. So in this case, I have taken the example of Bank of America Corporation, and CNN has discussed about this in 2014.
Thank you, Puma. I'm Sandhuni Ishwara. My student ID is TG03196. I'm going to present part 2 of our group presentation, and my presentation consists of 2 sections. Let's consider what are the requirements for listing on ASX. There are 3 main requirements to be considered when listing with ASX. They are number of shareholders, free float, company size. Company size can be divided into parts like profit test and assets test. So let's move to the next slide. When listed with ASX, there are few problems to be considered for the companies. They are susceptible to market conditions, disclosure and reporting requirements, media exposure, cost and fees, etc. So because of these problems, company will face extra responsibility to overcome these problems. Let's move to the next slide. There are 7 steps to listing with ASX. Let's move to the next slide. When a company listing with ASX, company can gain more advantages like access to capital for growth, currency for external growth, higher public investor profile, institutional investment, improved valuation, greater efficiency, etc. Let's move to the second part of my presentation, fact finding on financial advisory service registration in Australia. What is the ASIC's Financial Advisors Register? Financial Advisors Register is a public record of financial advisors who provide personal advice on complex financial products. So, who should be on the register? Normally, Financial Advisor Register lists all individuals who are authorized to work as a financial advisor. Normally, ASIC manages the Financial Advisor Register, and AFS licenses responsibility to add and update information on the register. So this register is about all information of registers, fairs, company and organizations, business names, financial advisors. So this is the end of my presentation. I'm going to hand over to the next presenter. Thank you.
Thank you, Sandhini. I am Pranav Subramaniam. My student ID is ENE3379. My tutorial group is 20. Okay, now I am talking about my part 3. My part 3 presentation purpose is an analyze with cash flows of project to determine the sensitivity of the project net present value with the following changes. The following changes are: the unit sale decreased by 10%, first one. The second one, price per unit decreased by 10%. The third one, variable cost per unit increased 10%. And the last one, the cash fixed cost per year increased by 10%. Here, for the every section, every part, the first, the net present value, the original value is 6,740,518. This is the original value. Then I calculate the first changes. The first changes is net present value at unit sale decreased by 10%. That time the value is 5,886,239. The next changes is the net present value at price per unit decreased by 10%. That time the value is 5,031,900. The next change is net present value at variable cost per unit increased by 10%. That time the value is 7,594,797. Then last changes is the cash fixed cost per year increased by 10%. The value is 6,662,857. This is my values for calculation value for the changes. Then I give for the conclusion following results. When unit sale decreased by 10%, the net present value has been reduced. After when price per unit decreased by 10%, the net present value has been reduced. When variable cost per unit increased by 10%, net present value has been increased. When cash fixed cost for the year increased by 10%, the net present value has been reduced.